day trading versus swing trading. Today, we're going to this video, we're going to talk through each of the trading styles, what may fit you best, how to execute on them, and to use the charts and understand charting to make your entry points and your exit points to yield profits. All right. So welcome to the channel, everybody. My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I'm an options trader primarily, do trade futures a little bit as well. I've been trading for the past 6 going on 7 years, have traded during the Trump tariffs in 2018. And now we've traded to 2022 bear market. And even at the time of this recording, 2025 is kind of an indecision point at this correction territory where we are either going to go into a bear market or correct very nicely and continue back to all-time highs. All right. So without further ado, let's jump into today's video. I'm going to use some definitions for you. So if you are a learner, a person that wants to take notes and understand the clear difference. And also I'm going to jump on the charts and show you how you would execute a day trade and a swing trade, because I think trading gets this rap that you need to be on the charts every single day and learning this stuff and all moving parts all over the place. And that's not the reality of it. It may seem like it if you're a beginner. So this is for beginners, intermediates, and even advanced folks if you want to take from this video and teach your community. But I like to keep it simple, stupid. All right. The KISS method. So without further ado, let's jump into it. All righty. So I've got my Notion template up here. And we got day trading versus swing trading. Okay. So the first thing that I want you to understand is the definition of trading. Okay. You have a long-term investing, which is where the buy and hold method comes in. You buy a stock share of Apple, for example. At the time of this recording, Apple is at $212.69. Okay. So you buy a share Apple, and that Apple share you hold until you decide to sell or sell it all, and maybe you pass it down to kids, so on and so forth. Okay. It's in your retirement portfolio. You're holding for 5, 10, 20 years plus, whatever it might be. Long-term investing. So the concept of long-term investing is really never to sell unless you're maybe trimming some profits, but you're looking to hold for that wealth building. The term trading comes from the exchange of buy and a sell of said asset, a stock, or an index potentially. Okay. The overall stock market, the S&P 500, the NASDAQ, primarily the tech index. And then you have the small cap indexes and some other ETFs that may include other stocks in a class. Okay. ETFs, if you don't know what the exchange traded fund. So it's like a collective of these different stocks all in one maybe sector. Okay. And I'll show you what that looks like on the charts. So I want to make sure I never lose anybody on my videos, that you stay with me for the entirety of the time. All right. So there's investing versus trading. Okay. Because the psychological sentiment of the stock market is that people get the language confused, investing versus trading, and you can use them interchangeably, but just wanted to start there. So if we're talking about trading, typically trading, someone is looking to yield income from said trade. So either that could be a day, in minutes, in a couple of months. They're looking to pull those profits into their bank account and use it for reinvestment or use it to buy consumer goods, whatever it may be. Okay. So if you're talking about trading, hey, I want to learn how to trade. That means you're typically thinking, I want to generate some income I can use in the short term. All right. Day trading. Now there's 4 different types of trades, but I wanted to compare the main 2, which is day trading versus swing trading. Okay. So let me type in the other 2 just for my overachievers that they may want to understand what those are as well. Okay. Scalp, day, swing, and leap. Okay. Now, these are the first 2. These are the main 2 that we're going to be talking about here, which are day trades and highlight this like that. Okay. Day trade and swing trade. What you'll typically see is you'll see leap included with a swing, and you'll typically see a scalp in here. Okay. And it'll look like that. And this will make sense as we go along. So a day trade, the time commitment on a day trade, and I'll read the definition here. Day trading involves opening and closing positions within the same day trade period. Traders never hold positions overnight. So if I enter a trade, whatever type of trade that may be, and then I exit the trade before the closing of the bell, okay? The stock market opens at 9:30, and I'm talking about the New York stock market, not if you're watching from other you trade futures, or there are other assets that you may trade that are open up 22, 23 hours of the day. I'm talking about from 9:30 Eastern to 4 p.m. Eastern, okay? So in those trading hours, that day trade is executed and exited. Entry, exit. The time commitment requires constant market monitoring during the trading hours. So what that means is, it doesn't mean that if you work a full-time job, that once you have the skill set of trading, you can't day trade, especially for those that are on the computer or have more of a stagnant job where you may have some breaks and you can look at the market, you have your laptop available, you have your phone, you have the ability to look at a chart and execute a trade, right? So I do have community members inside of Leverage University, which is my Discord. If you want to join further and learn more, get some one-on-one mentoring, understand more entrepreneurship, understand the skill set of trading, signals, live trading, all those kind of things, trade ideas, the links down below. So I do have professionals that are day trading while also being able to manage a 9-to-5 or a full-time career. All right. But it does take time to understand the market. So I want to make exceptions, but also have a clear definition of each one of these things. So it requires constant market monitoring. So what a lot of people may do is they get into options trading, or they hear about these things and they may jump in and they're like, oh, I'll just put in something, right? Put in a trade because my mentor or whoever's teaching me or whatever, I think I know what I'm doing. I'll just put it in and see what happens at the end of the day. That's a gambling mentality. That's not really a strategy. So you need, at least in my opinion, an hour to maximum 2 hours to execute a proper day trade. Okay. That could be at the first 2 hours of the day, maybe a little bit of the middle, and then the final, as we call it, power hour of the market, which is the last hour and a half to, if you want to just round it to 2 hours of the market. So if you're in total for a day trade, you can segment your time in those hour and a half chunks throughout the day. So when people think that they need to be on the charts and be in front of everything, you can execute, if you know what you're looking for, a day trade properly with only about an hour and a half spent in the market. Okay. So position duration, minutes to hours. So you can be, and here's where this scalp comes in. A position means how long you're in that trade. So you open a position, meaning you buy that trade, whatever it is, and I'll show you on the charts what it looks like. You buy that trade, and then you can make money within minutes. So you hear those stories of, I made $1,000 in 5 minutes. That is possible. Okay. I've made $100 in 1 minute. That's possible. Okay. With execution, that is not a gamble. That is not a, whoa, man, I got lucky. No, these are true strategies. I've done them. My community members have done them. And then you can hold that position for the duration of that day. So it could be hours. The trading style, more frequent trade, smaller profit targets. And I wanted to make a disclaimer around this definition, because you don't have to necessarily have more frequent trades, but typically for day trading, you may trade a couple of times during the week, or you can take 1 to 3 trades within that trading day to equal up your profits. So compared to what we'll get to in a second, swing trading, where you may only have to execute 1 trade, but have to hold it longer. Yes, more frequent trades are typical with day trading because you're in and out. And then the next day you come in and you see a trade opportunity, you're in and out. You skip a day, you wait till Thursday, you see a trade, you're in and you're out. And then at the end of the day, you may see another trade. So you take 2 or 3 trades during that same trading 9:30 to 4 p.m. Eastern Standard Time. Okay. Small profit targets. Yes and no. Profit targets, key target, meaning that because the trade is so short, you can make a lot of money in a small period of time, but it might be a very small movement. So the stock might only move $3, $4 in the trading day. However, because you're trading a certain type of way, whether it options or futures or whatnot, in this particular example, I'll use options. In options, a $3 to $4 stock move, the price of the stock, for example, Apple, that could be 100% return on your money on that trade. So if you're getting my drift, trading is different from long-term investing. All right. So generating income versus maybe wealth building and holding those assets for a period of time. Okay. Risk management, which is one of the most primary pieces. Strict stop losses and quick decision making are required. So stop losses means if it goes in the wrong direction from your trade plan or your trade idea, then you stop out of that trade. Give you an example. My position size that I put into said trade is $300. My risk on that trade is not the full $300 because I'm going to stop out of that trade if it goes the wrong direction. So let's take, for example, you have a 20% stop loss, meaning you don't want to lose more than 20% on this particular trade. That means if it hits $60, that's 20% of 300, I'm out. So what people get misconstrued is that, and it happens to all of us. I've lost the full position size sometimes. I've gotten greedy, whatever it is, it happens. But I'm talking about the rules and the proper way of trading is that you have strict stop losses so you can find your next trade. Cool, I lost 60 on that one. That's fine. Let me go find the next trade and then yield 150 on the next trade. So my net profit is positive, right? So strict stop losses because it's such a short period of time. I'm in and out of a trade. So if it's not going in my direction, if I'm looking to trade down and it's going back up, I'm out. I got the direction wrong. If it's going up and it shoots back down, I got to stop out because I wasn't looking to hold that trade. That wasn't the idea for the trade. I was looking to get in and out within that period of time. So I have to cut it. What a lot of people do, and if you're familiar with this, let me know down in the comments, they will unintentionally turn a day trade into a swing trade. That means they meant to get out, and they should have stopped out. They should have, but they'll be like, I'll hold it a little bit longer into the next day just to see. Right. So they'll turn it into a swing trade. Okay. So yes, when people ask this, you can turn a day trade into a swing trade because now you've carried the trade overnight, right? You did not sell it within that day. And yes, you can do that. For my beginners out there, Brian, is there a specific button that you have to click for a day trade? No, you're making the decision, right? It's not like, hey, here's day trade or swing trade. I'll show you in the charts what it looks like. No, that's not how this works, right? You enter the trade and you can decide whether to take it out now if you're in profit or you're like, I think this can go a little bit further, so I'm going to carry it over. Or I'm comfortable with the risk. I see more room for profitability. Let me swing trade it. Okay. Now, if none of this is making sense, it still sounds a little bit confusing, right? You may need to be in some type of community. You may need to see some live trading. You may need to see a person actually doing the act to get it. And we do offer that inside of our Discord. So if you need some support on that, click the link down below or keep watching these videos and learning as well. All right. Let's jump into swing trading. So let me know down below in the comments if day trading was good for you, if you got a grasp on day trading. Okay. Now, Brian, you remember these things you were talking about up here? How does this include? A scalp can be a type of day trade. So a scalp, I want you to think quick, minutes, potentially seconds for some folks, right? In and out, right? I see it moving direction really quick. I'm out. Right? Underneath a minute, 2 minutes, 5 minutes, typically minutes, that is a scalp trade. So you see how now you'll hear a person say, I'm scalping, right? I'm scalping. If you never heard that, that is a term that traders typically use, right? So that a person could be just a scalper. They like being in and out of trades very quickly. That is their trading style. A person may be more of a day trader. So they like to hold their trades a little bit longer, maybe, a couple of minutes, but then it expands into, I want to hold it for the next hour, and then they're out. Or they're like, hey, I'm going to hold it throughout the full day. I'll take profit at the end of the day. Right. All of those are a day trade, those two. So a scalp is a day trade. Okay. Let's jump into swings. Swing trading. Swing trading involves holding positions for several days to weeks, attempting to profit from swings in price momentum. Okay. So I want you to pay close attention to this period right here, which is holding positions for several days to several weeks to potentially several months. You're carrying over each day, each day, each day. So if you hold a trade overnight, you are now swing trading. You're now swing trading, right? So if you're ever asked, hey, what type of trading do you do? Well, I do swing trading, and I also primarily do day trading, but I like scalping, right? That's what you'll hear from an experienced trader or just a trader in general that's getting started, that's comfortable with the language. Okay. Time commitment, less intensive, can be done part-time. Now, so can day trading. So do you see, when people are looking for a one-sided answer, which one is the best? Which one's easier? Neither one is easier. You still have to do the work to analyze the trade. Okay. What I personally like about day trading is that I can sleep at night. I've locked in my profits. No news can mess it up. It can go straight to my bank account. That's why you see a lot of people that are day trading or light day trading, because they've secured their profits for the day. No one can take that away from them. A swing trade, you can be up one day. News comes in overnight. Maybe, the president says something, a catastrophe happens. The company gets bad news or good news, and it goes in the opposite direction. You wake up, it's like, wait a minute, I thought I was profitable. So now you have to wait a little bit longer. So swing trading versus day trading, neither one is easier. Okay. It's based off of your time commitment and how you see the market. Okay. Less intensive, can be done part-time. So I will say the pros of swing trading is that you have more time for the trade to play out. Okay. That means if you're a busy professional, or you are, you got kids, or you got stuff going on, and you're like, man, I can't watch the markets every day. I'm cool with this playing out another week, 2 weeks. I don't want to lock in profits right away. I can wait. Okay. To see if it plays out. Okay. The position duration, days to weeks to potentially even months. Okay. Trading style, fewer trades, larger profit targets. So you're taking fewer trades. Maybe you only have one swing trade, and you're looking to enter March 1st and then exit March 31st. So you want to hold that trade through the entirety of the month of March. Okay. That is a possibility. So you only have one trade that could play out. Okay. Risk management, wider stop losses. This one gets folks. Okay. More room for price fluctuation. Here's where the con comes in, meaning you've got to be very comfortable with the price going up and down. So you could be up 20%, back down 15%, up 40%, back down 20%, up 50%. And your objective is like, it's still not at my profit target. So every day you're itching, like, do I take it out now? Do I take it out now? Do I take it out now? You can take it out and take your profit whenever. So wider stop losses means fluctuation of price can go back and forth before it gets to your desired destination. Okay. So that is when I introduce swing trading to my community, clients, anybody. They're like, I heard this is easier. Like, I only have to enter and just, put time on the contract and, just wait a month and it should play out. Right. I'm like, yeah, that's, yeah, but you haven't locked in any profits yet. So you got to be patient. And a lot of folks don't have patience. Right. So as you're like trying to decide what your trading style is, you're not going to know until you get into the market, until you get in the game. All right. It's very similar to sports, right? You don't know what position you're good at until you start handling the ball, or until you start getting that position, whatever you like, or what sport, and how you play the game. Okay. So you've got to get in the game to understand what type of style you start liking, right? Key considerations, and then I'll go to the charts. Before choosing either style, consider your available time commitment, right? I just told you day trading, you can have a job, you can have other things going on. You just have to be a little bit more intentional about your time on in the market. You can't be lackadaisical. You have to have a trade plan. You have to know what's going on, but you can yield a decent amount of profit in that particular day or that time span, right? And you lock it in. Remember, day trade, you're closing out that trade. Cool, I made X amount today, right? That's someone's job, right? $200, $300, $400 a day. For some folks, $100 a day is very easy to make in the markets if you know what you're doing, all right? Even my beginners or anyone that comes in my community, if I execute a trade and they follow along, they understand that trade, like, man, Brian, I made $150 a day and I really didn't have to risk much or do much. I'm like, yeah, that's how much a part-time job or someone else is trying to make on the side. For some folks, that's full-time income. So day trading, yes, you can do it, but it will require you to understand the skill a little bit more to not just let it play out. Okay. Risk tolerance. What is your risk tolerance? Are you comfortable with if you have decent amount of patience, are you comfortable with price fluctuation? If you have $1,000 into a trade, because it's going to cost more sometimes for swing trading, I'll show you on the charts, you may have to be comfortable with those price fluctuations going up and down and up and down. I know some of y'all are experiencing that now. When you bought Tesla, and then it was up, and then you're like, it's back down, then you're holding it. You bought Nvidia, and then it's up to 150, back down to 110. Think about that with trading, okay? Capital requirements. So both of them, capital requirements means how much money do I need to start trading? You do not need a lot. In my opinion, there's 3 different tiers that I put people in, right? I typically say that $1,000 to $1,500 for somebody to start day trading is a starting point. That's a good starting point. You can typically have a decent amount of wiggle room, right? $2,500 to $3,000 is kind of that middle sweet spot. And if someone's like, hey, I've got $5,000, I want to start with that, that's cool too, right? That is a higher level where I think people should start. But $1,000 to $1,500 deposit into a trading account, getting comfortable with that is my starting point for what I think, right? Does that mean for anyone else? No, Brian, someone should start with 25,000. No, typically the more you put in, the more risk you have, right? Because you're not used to managing that amount. So you can make a lot with a couple of grand. You can double that properly. You can triple that properly, right? You can yield half of that properly. So if you have $1,500 and at the end of the month, you've now yielded profit from day trading, maybe you made $1,000. That is very realistic. That is typically common if you're knowing what you're doing and doing it properly with proper risk management. Now, if you accelerate that, you can triple that. You can turn 15 into potentially 5 or 6, right? And I'm saying this because I've done it personally and my community has done it inside of our Discord. Okay. So, if you're inside of Leverage University and you're watching this video, please comment down below if you've yielded some profits from our community and also on your own, right? So let me know. Trading psychology and market knowledge. These are the last 2 pieces before I get out of your hair and jump on the chart so you can see what this is talking about in real time. Trading psychology is the charts are emotionally based. The market is emotionally based. So if you see a big green candle or a green day in the markets and you're just like, I'm going to trade up, right? That is an emotion typically talking. That's not a strategy. That's not a tactic. You're just trading with the emotions of what everyone else is doing. That's a trading style. It's a momentum trade, right? You're just trading in the direction of the momentum, but you don't have an entry. You don't have an exit. You don't know where price is going. You just, I'll put it in because it's green today, right? And then if it's going down, it's red. It's like, oh, I can make money going down. Let me just put something in there and trade the market down to make money, okay? So market trading psychology is very important to understand how you react emotionally. I always tell folks the stock market, if you learn nothing else, maybe some other skill sets have been good, for your psyche or not good for your psyche, but the stock market will show you exactly who you are. If you're greedy, if you're impatient, if you have no plan, if you're emotional, if you're panicky, like whatever it may be, it's going to come out of the market. So I say for folks, like, if you're trying to do this or thinking about doing this or understanding it or keep trying to push towards it and not giving up, just think about it as a personal development journey. It's like, wow, like, why am I so greedy? Start asking yourself questions. Why am I risk averse that much? I thought I was like okay with risk, but maybe I'm not. But I want to be, because with more risk sometimes comes more reward, right? So that being said, you have to challenge yourself to learn more about who you are, to develop a trading style for yourself. Market knowledge, understanding, and day trading. I'm not really worried about, or anybody that's day trading is not really worried about if Tesla is going up. If the day presents an opportunity to trade Tesla down, then you're going to trade against the market, right? If the market is going down and the day presents an opportunity to trade the market back up, so you're trading the momentum and the price action of that day, which is going up and down. Okay. Swing trading, typically you're looking on a bigger time frame. So that means you're wanting to typically trade in the direction of the market. And I personally only like to swing trade the upside, right? The market goes up over time, right? So trading and holding a trade against the market on the downside, you've got to be a little bit more strategic, which we have done in some of trades. I do signal those. I do, puts, as it's called, for those that don't know, puts and calls and options. I have traded puts for a swing trade, but it's very short lived. I'm not trying to carry a big put swing trade, meaning trading against the market to the downside. Okay. So understanding the market knowledge, when the news is, if you're going to swing trade, you might have to be a little bit more familiar with the economy. When is the news events? When are they going to do the interest rate decisions? When does this company have earnings? Like, you've got to be a little bit more attentive to what's going on in the economy as well. All right. So we good. Did this serve you going over the day trading versus swing trading on here? You're like, yeah, Brian, I'm good. I'm still trying to get it. I get it. It's going to take some time, but hopefully as you're taking notes and understanding, you have now a clarity around the difference between each. So you're not trying to choose either one. You're going to have to get in the game. All right. But for those that are in the game, you're like, I don't know yet. That's okay. Right. I've had people in my community and anyone else that's like, man, I thought swing trading would be easier, but I liked locking in my profits for the day. I like saying that I made X amount in this day, right? Because they didn't have to worry. They locked in their profits. But I have other people that are like, the angst of the movement is too fast. Like, day trading is back and forth. I just don't have the time for it. So they have to be a little bit more patient to yield their profits. While everyone is like sharing wins on the day trade, they're waiting on their trade to play out for the swing trade, right? So there you go. Let's jump into the charts and I'll show you the difference. And let me see if I can open up our Discord here. We don't have to log in. All right, there we go. Okay. So in our particular community in Leverage University, here's all the channels that we have. As you can see, they're locked down by these drop downs. Okay. Our community, our thought leader hub. If you're an entrepreneur or desiring to be an entrepreneur, I call us thought leaders. Club rooms, we have other different channels here and so forth. And I'm just showing this so you can follow along. Our crypto hub, altcoins, Bitcoin, what the charts are doing. And then our trading floor, if we drop that down, right? I have it sectioned off into day trades. So anything that I put in here, I'm looking for people to have the mindset of getting in and out within that day period. Okay. So locking your profits. Swing trade, I have it organized into threads. Okay. And I want to show you a good swing trade that we took on Merck. Okay. So Merck, February 19th, 2025, I saw that Merck had retraced, right? Here's the chart right here. You work from right to left. Okay. Let me shrink myself just a little bit. You work from right to left. So here was Merck when I saw it. And the beauty about understanding a chart is you can look left and see what the price did at that area last time. And I'm speaking more towards my beginners because I want these videos to be all inclusive. So if you're advanced and you're like, okay, I get it, just remember when you're a beginner. Okay. If you need a reminder, this may be good for you as well. If I look to the left, exactly at $80, I'd seen, and if you see all these lines, these are things that I've drawn. I just want you to focus on the chart moving back and forth. So Merck had taken a nosedive back down to an area where buyers were present. Last time Merck got to $80, it went up, it went up, it went up, and it went up. Okay. So I saw Merck back down at this $80 mark, and I thought that it had, I didn't think, I had context clues and different tools that we use in trading, such as the Fibonacci retracement. I'm using, gaps in the stock, things of that nature, to execute, and candle structure. And these are all things that I teach inside the community, and I'll be creating more videos on the channel. These are all context clues and tools that you use to be able to make a decision. Okay. So this I classified as a swing trade. It had retraced. It was $132 and retraced back to 80. So you're talking about almost 100%. Excuse me, 50%. So 132, 80. So you're talking about roughly around 40% discount on the stock. Okay. And I was like, hey guys, I see this gap fill back up to $180, watching for contracts 321. So this was, you see the contracts for the expiration date. Okay. 321, but potentially into June. So this was February, middle of February. So do you see I was giving the contracts or the trade time to play out? All right. If we come down here, it started moving. All right. There was at 81. We entered right here and it started moving. It was already at 87. Okay. I was updating everybody. I said, hey, congrats to anyone who held. There was Lloyd who took that. And you see the date here. That was on the 21st. So now we're 2 days into the trade and it's already back to 89. That's $9 movement. And then this was March 7th. So now you're talking about close to 2 weeks into this trade. And now it is almost fully filled this gap and it's almost back to 100. Do you see what I said at the very beginning has a gap fill back to 100 plus? Okay. And if you don't know what gaps are, gap fills, that is a gap in the stock when news happens overnight. All right. So bad news, or they had earnings and it gapped down. So it just woke up in the morning and you're down. Okay. So with that being said, the stock will recover. It'll start to fill that gap and it's back up. So I love that type of swing trade, a solid company that has moved all the way down into a decent support, and we can swing trade it back to the upside. Okay. In options, that's called a call. So I would buy a call. All right. Cool. So there's a swing trade. You see how it took roughly 2 weeks or so to fully play out, but you could have taken profit at any time. So you enter on the 19th and you're working, you're doing other things, and it's playing out in the background. And you, in 2 weeks, you're like, oh, I made 100+% on my money. Right. I think this trade went about 300%. Okay. So position size, if you had $100, you made 300. Right. If you had $1,000, there you go. You now have made 3,000. Get my drift? So there you go. A day trade. Okay. So that was Merck. Let's see where Merck is now. Okay. So still there was our entry. It moved all the way up here. Okay. So that day trade, or excuse me, that swing trade has played out fully. And then we'll execute on another one wherever it comes back to. Okay. Now, A day trade is what we did today on Apple. Okay, Apple. So a swing trade, you're typically looking on a chart on a monthly, weekly, and daily time frame. Okay, monthly, weekly, and daily time frames. So you're looking at higher time frames. You may even come into a couple of the hourlies, a 4 hour and a 1 hour, but you are looking at the higher time frames because it may take longer to play out. So I need to look at this chart versus a 1 minute chart. 1 minute chart on a swing trade is not really going to help me out. Okay. I need to look at bigger time frames. What is the stock doing over a longer period of time? Do you see here? There's 2018, 2020, 2023, and I can see what the stock might do in the next month to a year. Where is it headed? All right. So let's jump on Apple, and a day trade that we executed today is typically I like to execute my day trades on a 5, 15, and looking at a 30-minute. I may even check an hourly. I'll make my entries on a 2 or a 5-minute. Okay. So do you see that that's just my style? That's not a rule that you have to do for my beginners. Okay. That is just smaller time frames is where you want to execute a day trade because you're only looking at that period of time within that day. All right. That's all I'm looking at. So Apple today, I want you to see this. Apple, here is the day of Apple, this dark black area. The light gray area is what's happening after hours when the market's closed. So here's tomorrow when it will open again. So when Apple opened today, it was right here at 213. Okay. And what I saw on Apple is I went up to an hourly and I saw that Apple had some resistance at 215. Do you see here? 215 came down, 215 came down, and there was Apple before, which was support. So support now becomes resistance. Okay. Going a little bit further for my beginners, but if you're getting it, you already understand what I'm talking about. So what does that mean? That means that if Apple the previous days have been rejecting 215, meaning can't get above it, I want to trade it down. Okay. So I'm looking here on Apple and I see it push up into 215 and it can't get back up again. Can't get back up again. Can't get back up again. I signaled Apple puts. A put the phone down. Okay. So we're making money going down. I buy a put right here at 214. And there it starts going. And Apple's making money, making money, making money, and it goes all the way down to 211.49. So it doesn't seem like a big move because the stock only moved from 214 to 211. But this is 30 to 40% on your money with options. Here it is. Day trades. Here was Apple. There's the timestamp. Looking at resistance at 215. Starters, these are terms I use in the community if you're not familiar. Tight stop loss. So if it goes above 216, stop out of the trade. Okay. 212.5 put, 321 expiration, or you could do a 210 put, 321. Okay. I considered a decent setup. It wasn't my favorite, but I liked the area that it was in. So I said, it's a decent setup. So I gave it a B plus or so. Light scalp, right? So I'm not looking for this to be a big trade. If it is, right, then it could be big. If we get moving, could be big. Here's how the chart looked before we entered the trade. Do you see that there's 215, 215, 215, 215, and it did it again? I was like, okay, I'm starting to see it right here. Enter. And then as it's playing out, look at exactly what it's doing. Can't make it up. All right. There it is playing out perfectly. And then there it is finally playing out. Excuse me, that's NVIDIA, Apple. And then you can see now where it is. It reached 211. So there's Apple. I said perfection on Apple. Entered right here. Very tight stop loss. 30 to 40% on our money. Trade wins. And I like to shout out anyone else besides myself, but there's Apple 30% fire. Shout out to Dreamer for taking that. Okay. So that is a day trade, in and out. This trade took on a 30-minute, 31 hour, 2 hours, 3 hours, roughly around 3 hours to fully play out down to here from entry. Right. So do you think you could have held a trade for 3 hours and managed it if you've got a desk job or you got your phone available for you on your lunch break? Yeah, you can. So do you see if you can enter a day trade and still yield profit without having to be on the charts if you are having a proper plan and understand what you're doing? Okay. So that was a day trade. In, out. Locking your profit. Live to see another day. Okay. So with that being said, I'm going to go ahead and wrap this up. Hopefully it was valuable to you. If it was, make sure you hit that like button, subscribe button. Also hit that notification bell as well. And if you want to join Leverage University, if you like my teaching style, if you want to get some one-on-one coaching or mentorship, we do have boot camps, 3-day virtual boot camps as well that we run typically monthly. And then also I have one-on-one mentorships for life, business, entrepreneurship, and also this trading skill set. All right. I love you all. Let me know down in the comments how this video was, if you learned something, and look forward to seeing you soon. Peace, love, and blessings.